I'm going to start by, this is normally our Tuesday coaching session. We're doing it Wednesday because Dr. John's going to be with us. Most of you guys know Dr. Keppler from some other things that he's done, other webinars he's done. In the Edge course, he's got a couple that we have done. In his book at the bottom of this cover page is Profit with Market Profile, and wrote that a long time ago, still relevant. I got a signed copy actually from John that I sold on eBay last year, John, for $1,200 because it was signed. No, but I do got a signed copy of it. It's one of the books on my bookshelf. This isn't to sell books. This is John I reached out to John. I said, hey, would you mind doing this webinar on, well, I'll let John do it on what he's going to do it on. But where I'm trying to navigate is, where the guys who don't know as much as John and other prolific profilers, where the guys who think they know it all might be trading and where they might be stuck. But everything John has ever done from a profile educational standpoint has always been good. So I don't want to give you guys long introductions. John, let's just hit that share button. It'll kick me off. Should hit OK and then share the monitor you want to use.
Okay.
Take your time.
All right.
Here it comes. We got it. It says basic order flow trade setups.
Right.
Perfect. Everybody see that?
All right. Well, I'd like to welcome everyone to our presentation this morning. And what I wanted to do is to share with you some really very basic, very simple trading ideas and show you that sometimes we tend to make things more complicated than they should be. And there are some simple things that can generate some nice little profits for all of us. So let's go ahead and begin to take a look at what we want to discuss this morning. First of all, simply put, anytime we want to get into a trade, we're either going to be selling, we're going short, or we're going to be buying. And so the key thing is, when do I really want to be thinking about shorts and when do I want to be thinking about buying? And the answer to that question really is quite simple. You want to enter into shorts when you begin to see selling in the market, and naturally you want to enter into a market where you begin to see some aggressive buying. And typically, where does this happen? Well, we tend to see selling that actually is productive at levels of resistance in the market, and we tend to see aggressive buying or even responsive buying at levels of support in the market. And so perhaps then our starting point should always be to try to identify these key levels. And I'm going to begin really with some very basic, very simple concepts. I'm going to go back to the old tried and true candlesticks, and I'm going to integrate with them a little bit of profile concepts to help us identify those key levels where perhaps some opportunities might present themselves for us. So here I have 3 different sessions, and so we see 3 different profiles. And let me grab a pen here. And so you see we have one profile here. I have another one here. And of course, there's a third one here. And I trust that many of you are already familiar with the basic profile concepts where you have the value area high, the value area low, and what some of those concepts really mean, plus the volume point of control. Of course, being in Anthony's room, you should all be familiar with any sessions high and low and those key concepts. So first of all, this is how we use the profile. We take a look at profiles that have already been established for us. And by the way, this is always your most reliable information in the market, things that have already happened, because they're not going to change. They're facts. And if I rely on facts, I'm much better off than relying on conjecture and basing my decisions on conjecture or guesses of what is likely to happen. So this is the nice thing about fully developed profiles as we see in these 3 sessions. They actually tell us what took place and what happened in the market. Let me delete these. Okay. So first of all, the nice thing is the profiles also can easily identify for us the session highs, and never underestimate the value of a session high or a session low, because naturally these could either be levels of resistance or levels of support. So session highs and session lows. And naturally, if we're going to talk about highs and lows, we definitely need to talk about if we talk about the highs, we have to talk about the lows. So always keep in mind, where is my session high, where is my session low, and where is price relative to that. So we have those as basic concepts. Now, add to that your value area highs and your value area lows. And quite simply put, a value area high is the price level at which 70% of the high price at which that sort of encapsulates 70% of the volume traded within the session. And then the value area low is once again the low of where that volume, the bulk of the volume for that session was traded. And these actually provide some very, very important reference points for us. You can see here, for instance, that the high of the session was a level of resistance. We were unable to overtake it, and we came back down. Now here, the low provided support, and we came up above the value area low onto the value area high. We found some resistance there. Then we popped back up for another test. It failed, came back right down. We didn't go all the way down to the session low. We found some support at the value area low, and then we went back up and for a retest of the value area high of that session. So notice how there's really very little on the chart other than a simple analysis of what has already happened. So I know that I have a resistance level here. I know that I have a resistance level there and another one here. And of course, we can take our little tool here and draw some of these levels to help us mark where they are in the session. So when the next session opens up, these become key reference points for me, and I have to look closely and see what is going to happen, whether in fact the same thing that happened before will continue to happen, or whether I am going to see a perceptible change in the market. So that is one of the key uses, if you will, or the key helpful tips that we can garner from using a profile, helping us to identify these key reference levels. Yeah, go back here. All right. Now, some people also like to use the VPOC, or the volume point of control, and that is the key level where we had the largest amount of volume traded in the session as a key reference level. I tend to identify that as a secondary reference level. So there are primary levels, such as your highs, session lows, value area high, value area low, and then there are secondary levels. So I don't mean to belittle it, but at the same token, it is not one of my favorite reference levels, because notice what happens at a VPOC. We tend to see a lot of fluctuation. So it's not a very reliable one. Yes, at times it does prove reliable. And so it's something that I keep an eye on, but I really don't consider it one of my primary reference levels from the profile. For me, it is what I define as a secondary level. Another secondary level that profile traders use, or secondary levels, if you will, are what we describe as the high value, volume and low volume nodes. Now, during each profile, as it develops and after it's developed, we can always identify other key levels based on volume traded, other than the volume point of control. The volume point of control being the highest volume traded node, Now, there are others, for instance, that are low volume nodes. And here on these profiles, same profiles that we've been looking at, the low volume nodes are the points on the profile where we've had the least trading within a specific range within the profile. So within every, let's say, 3 points or 5 points, where was the lowest level and where was the highest? And those using that criteria, we can identify our highest trading nodes and our lowest ones. Now, in some cases, they are significant. In others, they don't really prove to be incredibly helpful. And that's why I call them secondary. So once again, here we have a high volume, low volume node. The red ones are the low, the high are the greens. In this case here, it did provide resistance for me, but it was overcome on this next leg up here. In this low volume node here, it was tested twice, and then on the second go around, it provided a level of support. But again, notice why I describe them as secondary. They're never as definitive and as critical as the information I get from a high or from a low or from the value area highs and lows. So if you want to take a look at them, do so, but do so with caution. All right, so now we are going to take a closer look at an actual trade setup. And as I promised, I'm going to use the profile and just some basic candlesticks. And in this case, I have a candlestick chart with a point and figure for reversal for the point and figure. And I'm going to look at it in the context of my profile. And so let's take a look here at this particular area, right at a value area high, and see what happens and how that can give us a nice, simple trade setup. So first of all, I know that that's a value area high, and I know that if I can't get above a value area high, I'm going to drop. And so now I begin to take a look at the candlesticks that are forming at this value area high to determine whether, in fact, it is going to provide a level of support or a level of resistance. So my focus is right here in this zone, right at the value area high of the session. And so let's see what happens. Well, before we go to the long, let's take a close look at the short here. And the setup is really quite simple. I'm looking for the failure. And what failure am I looking at? Well, if we take a look at the bars and the price action right at the value area high, I have a green, another green, and then I have a red. Well, what I'm looking for to confirm for me that I'm going short is I want to see a failure of this long green bar at the high. Because if in fact I break the low and I drop below the low of the green bar, then really these buyers have in essence failed and they are trapped up here, and I'm going to continue lower. So the setup really would tell me once I break the low of a green bar at the high, there is a high probability prices are going to continue to drop. And naturally, the next level of support will be right here at the volume point of control, and the next target likely to be the value area low. In this case here, we actually see prices come back up to revisit the VPOC. And so once again, we have to be mindful of what's happening in each bar as we navigate, and order flow is the key to helping us monitor that. But take a look at this. This is a very simple trade at a level of resistance. This could be a value area high. It could just simply be a high of a session. We simply come in and take our short the minute we take out a low of a green bar at the high if we're using a point and figure for reversal. And similarly, here what we're looking for is a failure of a red bar. instead at the support level when we're looking to buy. So these are sellers, the red bars, basically that are pushing price lower. So as soon as I take out one of those at the low, and I can go long at the high of once I take out the high of a red bar at the low, because that's failure of the sellers and they're being overtaken by the buyers. The nice thing about those trades is my stop loss is fairly tight. My stop loss really is the low of the prior green bar in this case, and um, I can use a rather tight stop and not get into a lot of trouble with these simple trades. So we've got the same concept at a high and at low, basically using the candlesticks and using the rejection of buying at the top and the rejection of selling at the low as really the criteria of entry and as my simple trade setup. Nothing complicated. All right, so now let's take it to the next level. And let's actually take a look at order flow, which will help us to even tighten our entry and use a more refined criteria, if you will. All right, so here we look at the high, and this is the same entry that we were looking at earlier. And rather than waiting for prices to take out the low of the green bar, I can track the order flow. And whenever I have 3 consecutive negative imbalances, as you can see here in this case, that is my trade setup for the low. I have 3 negative consecutive imbalances at a high. And one of them here, the high is even lower than the prior high. I would feel very comfortable taking a short right here at this price level, and my stop would be right here. That's a pretty nice tight stop. If I even wanted to be more conservative, I would put the stop up here. But because of these 3 consecutive negative imbalances, it gives me a really good entry for a short. So let's take a look at why the imbalance is so powerful and why having those 3 consecutive imbalances gives me a powerful setup. Well, first of all, we have to define or identify what an imbalance is, a sell imbalance. I trust that you are all familiar with the fact that some trades may take place at a bid and other trades will take place at an ask, and the imbalance will occur whenever I have more trades taking place at the bid below the ask above it. So I have an imbalance here, a negative imbalance. I have another negative imbalance here. And of course, I had a third one over here. So the sequence of those 3 imbalances is what identifies for me my entry. So I'm highlighting here the numbers with a negative imbalance, imbalance here, another imbalance there. And this is really the key here. Look at these trapped buyers. If someone had bought at the bid or bought at the ask, what's happened to them? Well, no one is bidding here anymore. I have a 0 here. And the number, even at the ask, has decreased significantly from the last time that we were trading at this price level. And then I have 2 negative imbalance below that. This is a very powerful push to the downside, where you can see that buying has really sort of capitulated, and the momentum is with the sellers, and that's where you want to be. And when this pattern occurs at a high, at one of our primary reference highs, that becomes a very useful trade setup for us. And once again, the nice thing about these particular patterns is the fact that the stop loss is fairly tight. Now, keep in mind that when we look at order flow, we're not going to see these same exact patterns if we're looking at different types of bars. So for instance, these are the patterns that tend to surface and develop when we're looking at a point and figure. It doesn't necessarily mean that I'm going to see these same exact patterns if I'm looking at volume bars or tick bars or time bars. there are different things that I look for depending on the type of bar that I'm looking at in terms of order flow. And this is one common mistake that many traders do. They take one rule and then they try to apply it in a different context. Make sure you always understand the context where you're trading. Now, take a look here at this particular imbalance to show you the power of the imbalance. This is another thing that we look at, the magnitude. This imbalance is really almost 7.5 times of the price above it. And when you get that kind of power also, that increases your level of comfort or your decision making. It gives you more confidence in that the trade is probably has a high probability of moving in the direction that you've established. So we take a look, we identify our reference points, and then we begin to look at how do we make our entry decision. And first, of course, we can simply base it on the candlestick and what's going on with the candlestick highs and lows, or we can refine it further and actually take a look at order flow and identify zones or price levels where buyers may be trapped and the sellers are starting to pick up momentum, and that's where the imbalances really help us. All right. Now, order flow is not only useful using imbalances, I can also learn a lot from order flow simply by looking at volume patterns and volume changes. And again, the reason I like to use these key reference levels is because I don't have to be looking at this everywhere. It helps me to focus my attention where it belongs, in the areas where the opportunities may exist. And as I mentioned earlier, those are the primary reference points on my charts. So here, once again, we're looking at a value area low. And so the key question is this value area low going to hold, or is it in fact going to break down, and will we continue to drop below the value area low? And in this case, all I have are really just the volumes, no more bid and ask. I'm not even looking at that level of detail, just the total volume. And these 4 low volume levels form a pattern that tells me I have a move to the upside and I have support. So let's take a look at this a little bit closer. First of all, I have a low volume level of 11 contracts here, followed by 313. And this is a significant jump. And what has happened when we experienced this jump? Prices went higher. I come back down and I have a higher low than this 313 with less volume. So now it tells me that these buyers have a strong appetite and are becoming even more aggressive above my value area low. And then the clencher for me is the next low that I begin to observe here, which is 14, which is even less than the 60. So notice a high volume here after a very low volume. So we're developing more appetite, and then a lower volume followed by an even lower volume. The buyers are really becoming more aggressive. These sequence of the 4 volumes at the low at a key reference low really provide me with a nice entry for a long entry. If I was waiting to just rely on the candlesticks, I would wait to take out the high of this red candle, because that would mean that these sellers have failed and now I'm above it. But look at how much earlier this would allow me to get into the trade. And not only that, they also give me a good spot for me to place my stop loss. So we can use the volume, we can use bid and ask, or if we just want to rely on the candlestick patterns, that can also be another simple way to make the decisions for our trades. But the key is, where do we look, when do we look, and what do we look at? And so where do we look? At key primary reference points. What do we look at? We look at failures or success. If sellers are failing or are they succeeding? If they're succeeding, naturally, prices are going to continue to drop lower. If they are failing, then we are going to see the buyers more in command and prices are going to move higher. We can do this by looking at the volume levels at the different bars. We can also do this by looking at the actual bid-ask levels of trade. All right. Just a quick plug here. If you are interested in sort of capturing some of these order flow opportunities, I am working on a course. It isn't released yet, and I promised Tony I would make it to the available to the edge traders at a significant discount. If you're interested in learning more about this, write a note to info@strategictrading.net, and when the course becomes available in October, I will uphold my offer to Anthony and make sure that you get it at a discounted price. With that, I will turn the floor over to you and answer any questions that you may have.
Super. Perfect, though. That's exactly what I was looking for. October, you said it was going to be ready?
Yes.
That's next month. You know, my birthday's in October.
Oh, I didn't know that. I'll have to give you a free one then.
I'll be 31.
Oh, wow.
Yeah.
I didn't realize you were that old.
Thank you. All right. So this is a good question. I ask myself a lot of times, but Bill says on a daily basis, do you combine overnight and day sessions, or do you separate the profiles accordingly?
I always separate. There are uses for both. However, if I am going to do any day trading, I also want to know for a comparison what happened in the evening relative to the prior day and what is happening today relative to what happened in the evening. When I started out in my presentation, I told you that for me, the most valuable information in what has already happened. And if I aggregate the information, meaning if I look at the full day session, that gives me a certain picture. If I break it down into different parts or different components, that gives me also another view. And both of them are useful depending on what I'm looking for and the nature of the opportunity that I'm seeking. And so you always sort of want to be moving between the breaking things down into smaller pieces and then also looking at the aggregate, because that does also give you a good perspective, a good long-term perspective as to what's happening in the market. So naturally, I don't just go between overnight and day session. I also like to look at the week as an aggregate, the whole week, what's been happening throughout this week, and then how does this prior day and the evening session fit into the context of the overall week.
The question I have also is volume or market? In your opinion, first, profile movement came with market profile, which is TPO, which is time. How long does price spend, or how much time does price spend in an area? And then I would say what, 10 or 15 years ago, volume profile became more popular. What's your opinion on both, on either? What's more important?
Okay. Naturally, without question, volume is always more important. Volume is the fuel that moves the market. It's not time. Time is sort of really how much do we have to wait, or how long will the market stay somewhere until volume comes in to move it. So volume is really what we want to focus our attention on, and time is not what moves the market. It's really the volume that moves it. So in my opinion, by far, volume is what I look at.
You know, when I was trying to meet girls, I'd have to wait a long time until a volume of them came around and I had a chance to move. I got to say this. This reminded me, that leopard, I got to tell this story because I was young. I was like 19 or 20, and I was in a bar that you weren't supposed to be in, but you try to get into a bar, and that's the way it was. And I had a girlfriend, and she had a painting of a leopard with real pretty eyes, right? And I'm talking to another girl, and I slipped and I said, you know, you got really pretty eyes. Reminds me of this painting that my girlfriend has uh, of a leopard. And the girl goes, oh, so you have a girlfriend? Yeah.
Well, the reason I have the leopard really is because I love the way he is looking sort of, and it reminded me of how one has to look at the market, and especially at order flow. You really need to have that same level of focus to be able to spot those opportunities and recognize them quickly. It's not, and in the market, it's fierce, and you really have to be on your toes and be very alert to capture those opportunities, because the market doesn't give you a lot of time to sort of sit around and diddle, and you know, the opportunities come and go real quick, and unless you're able to snap them, it's sometimes a little bit too late. And I often watch this with some of my students. They come in on the tail end of a move and they want to get into the market because now they've seen all the stuff that's indicated that we had a move, but it's a little bit too late. And so one has to be alert and
I was
one
always
has to
late.
be nimble.
Yeah, you're always late when you're early in this business. You're
Yes.
early in the business, you're always getting late. A takeoff of the first question by the same guy. So, with that being said, you separate the daily from the overnight sessions. Do you ever go into shorter time frames, like hourly profiles or certain area profiles?
Well, it really all depends. Am I tracking a trade that I'm already in? It all depends on your trading style and what you're doing. In trading, rarely is there sort of an absolute rule. I only look at hourly or I only look at 120 minutes. If I'm doing an analysis and I want to determine the strength of a particular move that I saw got initiated during the week, then I want to gauge the strength of that move over a period of time. I may in fact look at 120-minute increments over the next couple of days to see what's happening every 2 hours. Is that move still continuing? Am I still seeing volume build up in every 2 hours of time or not? So it just all really depends on what you're doing. There is no set ideal, oh, you always have to look at the hour or you have to look at the 2 hour. It really all depends. What is your strategy? What are you doing? And what's your focus? I'm looking at point and figure. If I'm doing short-term trades, I'm not trying to capture a swing trade using a PNF. I'm really looking at certain key levels, and I'm trying to capture a couple of points for a short-term trade. That's the goal of some of these setups that I've shown you. Don't think that these trades will last for a day or two or take you throughout an entire session. You have to always look at the context of what you're doing and have a reasonable goal that aligns with the context of what you're doing.
Christine asks if a value area high or low is taken out from a prior is taken out, right? Price
Yes,
trades through it, obviously. Do you still pay attention to it for
of
any kind of
course.
subsequent?
Of course, these key reference levels are not developed by chance or by coincidence, um, especially since they are based on volume. So they're not created in abstract, and so quite often, if I pierce through a value area high and I continue higher, I will come back for a retest of that value area high. And whether that value area high holds or not will determine whether prices will continue to drop or if in fact the move will have enough strength and continue higher. And you will see that. If we go back, let me go back and show you very early on in the profiles that I was showing you how that actually is the case, because that's a really good question. Okay, now take a look here. We have a value area high, and then we have a value area low. We go up above this value area high, we come back down, and we found that in this case, what supported us was the VPOC from that prior session, and it pushes us back up. And then we come back down for a retest. What are we retesting again? That value area low. It holds, and so we managed to push higher. Now, up here, this value area high gets tested a couple of times and it doesn't hold, and so we come back down. When we come back down, if you notice, prices begin to try to come back up above the value area low here, but really there's not much strength, and so it continues and it falls right through again. It is no coincidence that in fact this value area high is less than the prior value area low. And when I see that, I realize that there's weakness in the market, and in fact it fails twice because this value area high is even lower than the value area low of the prior day. So these key reference levels, the primary ones, are very important and are definitely worth looking at again and again. And you don't just sort of erase them off the chart, even though they've happened in the past. And we're always gauging what is happening now relative to what has already taken place before. So here, value has precipitously dropped below the value of this session. And the key question is, will it continue to drop lower, or is this where we're going to find support, and will value start to jump up above these value area highs? And only time will tell, but these become my reference points. I hope that helps answer the question for you.
Yeah, no, I think it did. It helped me. Someone says great answer about volume versus time. I agree. Next question. Prior session highs or low. How about same question about highs and lows? They still relevant after they're taken out?
Absolutely. Absolutely.
Same scenario. Dr. Raj asks, time was a substitute for volume when Stottlemyre started profile concepts. Volume was not easily available till after the close. Okay, maybe he's just answering.
Yes, he's saying why Stottlemyre originally started with time because
right.
data was not available. That's true. And this, he makes another good point, really. The tools that we have today really help us immensely beyond what was available, let's say, even 10 years ago. The platforms have really come a long ways, and we have access to a lot more useful information than we did in the past.
And it's just like any tools, right? Building construction materials, tools to build. Same concept, but they're better, made better and everything. Bob says, how do you deal with new real-time volume coming in and changing the primary and secondary levels?
Which primary and secondary? You mean the reference levels?
Yeah, like the value area highs and lows.
Okay. What do you mean, how do you deal with it? You have to take a look at it and track it. And you deal with it based on what this volume is doing. If the volume is buying, then of course you deal with it by trying to capture the momentum and move with the buyers. If in fact the volume is selling, then naturally you would want to be a seller as well and move with the momentum in the market. I am a momentum trader, meaning I take a look at the direction of the market and I try to go with the tide. I don't like to be a contra trader and sort of go against the tide because in my years of experience in trading, you tend to get burned a lot when you're going against the tide, if you will, or against the trend.
Right. So, I agree. I think most people weakness is always in life being wrong, getting out of losers. So if you're contrarian and you're bad at getting out of losers, then
you're really in trouble.
Yeah, then you're really in trouble. You got to contrarian trading is fading, and it's good if you're good at getting out of losers. But you got to be quick. It's got to be, you got to get paid sooner rather than later. But again, everything comes down to this.
Sure, and
you got to anticipate.
With momentum trading, also, if you're in trading in the right direction with the market, you have a little bit more tolerance for mistakes. As long as you're in the right direction, eventually the wave will help carry you and move you forward.
I like that.
Provided that you don't, you're not working with a really tight stop. Yeah. But if you're going against the market will teach you some hard lessons. Let's put it that way.
No doubt. So do you have a go-to reference period? Like you always look at, overnight and day session, or do you like 30-minute um, over something? So when you're looking at your profiles, you have like the screen you're showing now,
So
generally your go-to profile and how you'll
the screen I'm showing now is actually PNF candlesticks, PNF reverse.
right, but the profiles are separated, right? The volume profiles.
The volume. These are sessions. These are evening and day sessions.
Is
And
that your go-to time period? Like,
yes, I always. That's very important to do if you're trading futures. You must always take a look at what happened in the overnight session relative to the prior day, and then take a look at how the day is developing. There's a concept for the day session, which I trust that many of you are familiar with, which is the initial balance, the first hour, and see what's happening in that first hour relative to what happened in the overnight session. And that will really help guide you to the potential direction. I even look at a shorter time frame. I even look at the first 10 minutes of the day session, and I find that initial balance can be very helpful in determining the direction of the day and what's going to happen based on the high and the low of the first 10-minute period. And you may want to test that and sort of take a look at it. And you'll find that it'll give you a lot of really good clues early on in the day, that first 10 minutes, the level of volume, the amount of volume, the nature of the trades, the order flow, that first 10 minutes can be quite revealing.
do you have any good books you've read recently that you'd recommend?
Oh boy. I haven't been reading trading books. I've been reading other books. And the reason I haven't been reading any trading books is because if I'm coming up with theories and strategies, I don't like to have someone else bias my own thinking. I want to be able to use my creativity to develop my own strategies. And so I tend to shy away from trying to sort of follow someone else's footsteps or patterns. I've gone through a lot of the early training, reading the books, and now I'm at a stage where I'm trying to use my own knowledge and creativity to sort of develop my own technique and trading style. So no, I haven't. I can't recommend for you any trading books per se. But if you want some other good fun reading, let me know, and I would be happy to share with you some of the books some of the fiction I've been reading.
You don't want to know the books I've been reading. Now, I'm not a good finisher with books. I find that most books are the first third is where all the meat is, and the next 2/3 is repeating the first third just to make it 250 pages. That's just me.
Just as a side note, one of the recent books that I've read is a book called When, When, and it's also really interesting. And the reason I picked up that book was, and it does have some overtones, that may relate to trading, but it's about timing and how when things happen really has an impact on how they happen and how they develop. It's a very interesting book. It's a paperback. It's fairly inexpensive. If you have a chance to pick it up, it's light reading and it's kind of interesting. It's just called When.
When. I like
Mm-hmm.
that. That's the title, When?
Yes. And the author's name is even more interesting. His name is Pink.
Pink.
the author.
It says his name was Where.
Yeah.
No, that's I always say the when is important, is like where the market's going. Yeah, that's important.
It really isn't about markets. It's just about when in general in life, and sort of just when you time things and the influence of time on when things happen and how that has an impact.
That's why, yeah, I agree. I get it. And I think that's where the old saying, timing is everything,
Yes,
comes from. But it seems like an interesting read. John, are you asking, can we, not you, John, another John's asking, we know our bias based on profiling or volume analysis is the question. Can we know or create our bias based on profiling or volume analysis. It's one and the same in my opinion, but I would answer that in the affirmative. Yeah, you certainly could develop an opinion, right, as to
Sure. I mean,
where the price is going.
I don't like to say I have an opinion about the market. I like to think of it as I'm going to make a decision whether I'm going to be long or I'm going to be short. And then what I look for are what are the facts that support my decision. So the opinion is a little bit nebulous. And if I have enough facts to support my decision, then I will go long. If I don't, then and then that way also my thinking goes like this: if my decision does not prove to be accurate or correct, at what point am I convinced that that was the wrong decision? And basically, that's my stop loss. So rather than an opinion or a bias, we're always making decisions about what we want to do in the market. Do I want to be long or do I want to be short? And if so, what are the facts that I'm relying on? And at what point would I be 100% convinced that my logic and my decision is not the correct one?
I had a question, but I'm answering it. I'll answer it aloud. It says, could you make the overheads available? Instead of doing that, I'm recording it. I'm going to put it in the weekly coaching sessions portal and just replay it and take screenshots.
Sure, that's fine. And I can share them with your
If you want to send me an email,
sure, I'll send you a PDF of them, no problem.
The 2019 way of doing it is just take screenshots, but whatever.
Sure, either is fine by me.
The because I was using profiles, John, that were, well, first of all, more TPO, and I was combining the overnight with the day session. And I think I need to separate them and just use volume.
Yes,
right?
I would definitely make that recommendation. Notice also that when you're using volume, you have a lot more information. For instance, the high and low volume nodes that I identified as secondary reference points, time really doesn't help us with those as much, whereas volume does. And those are rather important because if you notice here in this area, very light volume. When I see that on a profile and prices sail right through it, and then when we come back up and I find that we're not able to get above this zone of light volume, that tells me that the selling pressure is still very strong. And this is all from data that we already have. This is not something that's happening current and I'm waiting for it. This is once this has already developed. And so it's still useful for me to see the distribution of volume from a volume profile. Time doesn't really give you that or does not give it to you as obvious or as coherent as you would get it from a volume chart. So notice this zone here is really a resistance zone. Prices sailed right through it. Very little volume was traded here, so there was hardly any buying when prices sailed right through here. And sure enough, every time we came up to this zone, we were hit on the head and popped right back down.
When you look at an overnight value area high low, all right, so the day is about to start. We haven't started the day session. Let's say it's 8 Central in the morning. And the overnight's pretty much established. It's almost over with, essentially. And you open up and you got a value area from overnight. And you might have answered this in some of your other discussions, so I apologize if you did. But when would you discount the value area that was made from overnight? At what point in the session? Hour into it, or could it depend on the how busy the market is?
Okay. The first question you have to ask yourself during the overnight session is how much volume was really traded during the overnight session. That in itself is a very revealing fact. If you have a very lightly traded overnight session where you had a big move, that usually doesn't bode well for the move. It's unlikely for it to continue on simply because it just doesn't have much support. But if in fact you find that you had a lot of volume traded in the overnight session, this is all relative. You have to know what the averages are for that particular instrument overnight. So of course for ES, there are certain averages for the overnight. For the NQ, it's different. For oil, for gold, it's all different. But you have to take a look at the aggregate. And based on that, you begin to sort of make an educated decision as to how important that value that was formed really is. And then when the day opens, that value area that was formed, where did we open relative to it? And were we able to hold it, or were we unable to hold it? And once you answer some of those questions, it really gives you a much better insight into what is going to happen during the day session once it opens.
Wait, I like that. Or not hold, able to hold or not hold overnight value area. I love when to find something out, you ask yourself a question, right? And that's what you're advising. Ask yourself a question and then find the answer. And it's a good way for a good progression. Above or below average volume. All right, it's above. Is the range stretched? Yeah. So value area might not mean as much. Maybe it's compressed. Okay, that's fine. We're opening up above value area from yesterday and above overnight value, and let's see what happens.
Exactly.
Very
How
good.
well will
Very
that
good questions.
how well will that value hold?
Someone also, it seemed like that book When.
Oh, somebody else read it?
I believe so.
It's a
I think
good book.
we've
It's
got
light
all
reading. It's really very light reading, nothing heavy duty, but it's
good.
fun. It's interesting.
I like light reading. I'm not, like I said, I have trouble finishing books, and I think it's because I lose interest because the material wanes. But that's fine. It's still, if you read a good book, just 1/3 of it, you read a good book.
That's true.
You read just a little bit of each book. So that's what they should invent. That'll be my book, the first third, and it'll be a book on how the first third of every book is only worth reading, and then my book will have all blank pages in the last 2/3. Be a 300-page book and only 100 filled. I might do that. But I think that's it. When they mean structure cleanup, Dr. Steve asks, what do you mean, or what do they mean? What do they mean by structure cleanup in profile?
Who's they?
Yeah, that's could be a lot of profile education he's learned.
I don't know who they are, and
You never
I mean,
heard or structure
no,
cleanup?
no.
Yeah,
I mean, I've heard of I know what they mean by structural cleanup, but who is they is where did he hear that? That's what I'm trying to get
well,
at.
it is a type of setup.
No, there are well, you can in fact sort of, it's not really more of a setup, it's more of trying to anticipate what is likely to happen because of the structure of the profile. So for instance, here, let me give you an example here because it's right in front of us. Notice how in this overnight session, the structure is very scant. There's really very little activity. Whenever you see that, you know that that's not going to remain unvisited for very long. It just cannot be supported because it means that the market moved without a lot of volume support. And so the likelihood that this will be sustained is not very high. And so what you want to do is look at what happens when prices come back to revisit this area. Can it hold? And if it does, then this is very powerful buying, and you're going to see a huge move follow this, because the reason we didn't have much structure is because there was such aggressive buying that it forced us upwards. And now when we're dipping back into it, we're not able to build that structure again. On the contrary, the buyers popped us in and popped us right back up again. But otherwise, what you see when we come back to visit the structure, if the structure isn't holding, then we have to build the structure before we can move back up again. And so these are the structural trades that you will hear about, and they have to do with the shape of the profile and the level of activity within a particular move. So that's what he's talking about.
All right, good stuff. And he says, thank you. All right. Well, John, let me know when the 2020 order flow
Okay, I will
program is
do
done.
that.
I'll remind everyone, but I know your courses are $1,200-$1,500, so $350.
Well, yeah, this will be a special price for your folks when it first comes out.
Yeah,
All right,
good.
take
But
care.
I think this
Best
was
of luck.
awesome. Good luck with everything, John. We'll stay in
All right.
touch.
Sure.
And,
Take care.
let me know.
All righty. Bye-bye.